All right, let's talk about a company that quite literally powers our digital world. Today, we're zeroing in on TSMC, or Taiwan Semiconductor Manufacturing Company, and the latest news surrounding its performance and what it means for the broader tech landscape. If you're invested in technology or just curious about the forces driving innovation, you'll want to pay close attention because TSMC's recent figures are nothing short of spectacular. The company just announced its consolidated revenue for May 2025, and the numbers speak volumes. We're looking at approximately NT dollars 320.516 billion, which represents a staggering 39.6% increase year over year. This isn't just a minor uptick, it's a monumental leap forward, showcasing the immense demand for their products and services. When we look at the cumulative picture for the first 5 months of the year, from January to May, the growth story gets even more compelling. TSMC's revenue during this period soared to about NT dollars 1.509337 trillion, marking an impressive 42.6% increase compared to the same period in the previous year. These sustained double-digit growth figures underscore the company's robust market position and its ability to continually expand its financial footprint. While May's revenue showed incredible year-over-year growth, it's worth noting a slight dip compared to April's figures, coming in 8% lower than the previous month. However, this sequential softening doesn't overshadow the overwhelmingly positive annual trend, which is the primary driver of investor confidence right now. The long-term trajectory remains firmly upward, fueled by powerful industry trends. So, what's behind this remarkable performance? The answer is clear: strong market demand, especially from the burgeoning field of artificial intelligence. TSMC's president, C.C. Wei, emphasized this point recently, highlighting how AI-driven demand, coupled with a modest recovery in other end markets, continues to significantly benefit the company's core business of wafer manufacturing. TSMC isn't just any chip maker, it is the world's largest contract chip maker. This means they are the silent powerhouse behind many of the tech giants we know and rely on daily. They supply critical components to heavyweights like Apple and Nvidia, making them an indispensable part of the global technology supply chain. Their innovation and manufacturing prowess are fundamental to the advancements we see in consumer electronics and cutting-edge AI systems alike. Looking ahead, the company's projections are equally optimistic. C.C. Wei stated that TSMC anticipates its sales in 2025, measured in US dollars, could see growth in the mid-20% range. This is a significant forecast, indicating continued expansion and market leadership. Furthermore, he projected that profits are expected to reach record highs. These forward-looking statements reinforce the positive sentiment surrounding the company's future prospects and its capacity to deliver sustained value. The market has certainly taken notice. TSMC's US-listed shares have been on an upward trajectory, rising more than 2% in pre-market trading on the back of the strong revenue data. Before this latest surge, the stock had already climbed 5% year-to-date. Over a longer horizon, the performance is even stronger, with the stock generating a 25.92% return over the past year and an impressive 266.66% gain over 5 years. This consistent appreciation speaks volumes about the company's fundamental strength and its appeal to investors seeking growth in the semiconductor sector. Currently, TSMC boasts a substantial market capitalization of around $1.07 trillion. This valuation places it among the elite companies globally, reflecting its pivotal role and scale within the semiconductor industry. Its financial metrics paint a picture of a well-managed and highly profitable enterprise. Delving deeper into its financial health, TSMC operates with a price-to-earnings ratio of 29.42 and a price-to-earnings-to-growth ratio of 0.66. These figures, particularly the price-to-earnings-to-growth ratio being below 1, often suggest that the company's earnings growth is strong relative to its PE, which can be an attractive indicator for growth-oriented investors. The company also maintains a beta of 1.27, indicating it tends to be slightly more volatile than the broader market, which is not uncommon common for a high-growth technology stock. Further reinforcing its solid financial footing are its balance sheet specifics. TSMC has a debt-to-equity ratio of 0.24, which is relatively low, indicating a healthy level of financial leverage and less reliance on borrowed capital. Its current ratio stands at 2.57, and its quick ratio at 2.30, both signaling strong liquidity and the ability to meet short-term obligations effectively. During its most recent quarterly earnings report on April 17th, TSMC delivered strong results, reporting $2.12 in earnings per share, or EPS. This figure comfortably topped analysts' consensus estimates of $2.03 per share. The company's revenue for that quarter was $25.82 billion. Looking ahead, equities analysts are projecting that TSMC will post 9.2 EPS for this current fiscal year, an outlook that bodes well for continued strong profitability. Profitability is a hallmark of TSMC's operations. The company recorded a net margin of 40.51% and a return on equity of 30.47% based on recent reports. Another source notes a profit margin of 41.69% and ROE of 31.64%. These robust margins demonstrate the company's efficiency in converting revenue into profit and its strong ability to generate returns for its shareholders. Such high levels of profitability are often indicative of a strong competitive advantage and efficient operations within the industry. For income-focused investors, TSMC recently announced a quarterly dividend of $0.6499 per share. This dividend is scheduled to be paid on Thursday, October 9th, to shareholders of record as of Tuesday, September 16th. On an annualized basis, this translates to a $2.60 dividend, yielding approximately 1.26%, based on recent stock prices. The company's dividend payout ratio is currently 30.46%, which suggests a sustainable dividend policy that balances returns to shareholders with reinvestment into the business. While some headlines might imply a cut, the declared dividend reflects the company's consistent approach to shareholder returns. Analyst sentiment remains overwhelmingly positive. According to market data, Taiwan Semiconductor Manufacturing holds a consensus rating of moderate buy. The average target price among analysts is $217, with individual target prices ranging from a low of $165.66 to a high of $265.34, and an average target of $224.36, suggesting additional upside potential from current levels. Several prominent brokerages have recently reiterated their positive outlooks on TSMC. Citigroup reaffirmed a buy rating, while Susquehanna reiterated a positive rating. Needham & Company LLC also maintained a buy rating with a price target of $225. Perhaps most notably, Barclays reissued an overweight rating and raised its price objective to $240, up from a previous target of $215. This strong analyst support, with 5 analysts issuing a buy rating and only 2 a hold rating, underscores the widespread confidence in TSMC's prospects. Institutional investors and hedge funds have also been actively adjusting their positions in TSMC, reflecting the stock's attractiveness. For instance, Gemmer Asset Management LLC significantly lifted its stake by 160.9% in the first quarter, adding 4,813 shares. Similarly, Vest Financial LLC boosted its holdings by 53.8% during the same period, acquiring an additional 5,751 shares. These substantial increases indicate strong conviction among some large money managers. On the other hand, some institutional players have trimmed their positions. Impact Capital Partners LLC, for example, reduced its stake by 36.4% during the first quarter, selling 3,775 shares. Despite these varied movements, institutional investors collectively own 16.51% of the company's stock, demonstrating significant institutional interest and a widespread presence in its ownership structure. The overall pattern shows a dynamic but generally confident confident institutional investment landscape for TSMC. Beyond financial reports, TSMC is making significant strategic moves that will shape its future and the global semiconductor landscape. The company's CEO, CCY, alongside President Donald Trump, previously announced TSMC's intention to invest a staggering $100 billion in U.S.-based chip manufacturing facilities. This massive investment highlights the company's commitment to global expansion and its crucial role in building resilient supply chains, especially given geopolitical considerations. This move is not just about production, it's about cementing its long-term global presence and influence. Taiwan Semiconductor Manufacturing Company Limited is a global leader in the semiconductor industry. Its core business revolves around the manufacturing, packaging, testing, and selling of integrated circuits and other semiconductor devices across a vast international footprint, including Taiwan, China, Europe, the Middle East, Africa, Japan, and the United States. They offer a diverse range of wafer fabrication processes, covering technologies like complementary metal oxide semiconductor logic, mixed signal, radio frequency, embedded memory, and bipolar CMOS mixed signal, among others. Their continuous focus on advanced technology and innovation is precisely what maintains their competitive edge in a highly demanding market. In essence, TSMC's recent revenue figures, coupled with its optimistic growth projections, strong financial health, and strategic global investments, paint a very compelling picture. The company is not just riding the wave of AI demand, it's actively shaping it, and its pivotal role in the global tech ecosystem seems to set to continue its impressive trajectory. As the world becomes increasingly reliant on advanced semiconductors, TSMC's importance will only grow. Thank you for joining me for this update on TSMC. I hope this provides you with valuable insights into one of the most critical companies in the technology sector. Be sure to stay informed, and I look forward to our next conversation.